Good morning, all. This is Mythili Richards. I am an Internal Revenue Service and enrolled agent. I am a licensed tax practitioner who specializes in preparing the tax returns and represent the clients before the IRS. I work with the business resource partners in preparing their tax returns for individual, corporate, business, and nonprofit organization. Business resource partner is not just an accounting or bookkeeping firm. They specialize more in IT management and human resources and virtual office administration. So we will assist. I'm very happy to be a part of the team, and if you need any assistance in your business needs, please give us a call. So today we are going to be talking mainly about the much talked about 2017 tax reform. And before we jump into this tax reform plans and all these things, I want to talk to you a little bit about what is really a tax reform. It is a process that changes the existing tax laws or the managing the tax administration to make it more efficient and make it help us in our economic growth and benefit the society in many ways. So why this tax reform is so important, or why it is everybody is so curious about this 2017 tax reform? This is the first one since 1986 Reaganomics tax cut, and this is going to be a biggest one or the major one in the tax history. There is a lot of things still have to be cleared out, and maybe have to be iron out a lot of differences between these two plans recommended by the Senate and the House. But this is going to be a biggest tax cut on the Job Act since 1986. So what is happening right now is the Senate and the House have presented their reform bills and they have passed it. But as I mentioned before, it is still not clear, and there are a lot of differences between these two plans, and it has to be resolved, or all these wrinkles have to be ironed out, and the president will sign to make it as a law, and then when that passed, this is going to be one of the major, it will make a lot of big substantial changes in the U.S. tax system since 1986. So what is the current law? What is happening right now? Before we even discuss about our future potential reform, we want to understand what the tax system that is happening right now. Every individual or business have to pay tax on their income, and it is the individual. When we're talking about the individual, their gross income is the income from their wages or from the investment income from as a dividend or interest, or their business income, or their pension income from their Social Security benefits. It's all summed up as a gross income, and then after the deductions, we apply the 7 different tax rates to it, and then the lowest being the 10%, the highest being then 39.6%. So kind of like a merely saying that when your income goes up, the tax rate also goes up, and you pay the tax based on the income or the taxable income. The individuals are also entitled to take either one of the 2 major tax deductions. One is a standard deduction, which is set, which is as per the current system, it is $6,300 for a single taxpayer, and it is almost double for the married filing joint. And so they take that set deduction. For the itemized deductions, we can deduct your mortgage interest, your property taxes, your medical cost, excuse me, and your charitable contributions, unreimbursed business expenses, and some of the other miscellaneous costs like tax preparation fee, even your safe deposit box fee, you can deduct that as an expense. And whenever these itemized deductions exceed the standard deduction, you take the highest of it, and then that brings down your gross income to a taxable income. Then there is also some of the individuals who are on the higher income level also end up paying the alternative minimum tax. Those are the additional taxes. That is, some of these individuals have to calculate based on this alternative minimum tax rules, calculate their taxes, and they also calculate their regular taxes. And then when whatever is the greatest between those two will be the tax rates for them. So that is a higher, alternate minimum tax is a higher taxes than the regular tax. Then upon death, there's some of the there is also a death tax.
We have one question from the manifesting diva Jonah Hackley Davis is asking, how will this affect my business taxes?
The currently it is when the business when you have pass-through income, it is being taxed on the individual tax rate. But the proposal is like it is a set rate of 25%. So it will benefit some of the people who have a business income that was froze into their individual income tax, if that's what the question is about. So we are talking about the death tax right now. So there is a tax on the estate. When a person passes away, there's a value on the assets on the date of death, and they take an exemption of 5.4 million, and the balance is being taxed between 40 to 48% tax rate on that. Not many people have to use that, but it is still the fact that there's a death tax that is will be taxed on the estate of a person when they pass away. Then also when you come into the business side of it, the U.S. corporation pay the tax rate of like 35%, and it is one of the highest in the world. Even though they are allowed many deductions just like the individuals, but they still have the taxable income, and the tax rate of 35% is based on that. So what is happening right now is some of the corporations invested in the foreign corporation where the tax climate is much easier and simpler, and the tax rate is much lower than the USA, and there's a lot of shift of income to the foreign countries just because of the tax rate. So as I mentioned before, we can't be very clear on what is going to happen, and they are still debating between debating what to make it as a permanent one. So before that happens, we don't know what our potential reform is going to be, but we can talk a little bit about what is may happen and what if scenario happens. So when you're talking about the individual, how it's going to be affected, this new tax reform is they're going to be simplifying the income tax brackets. It's going to be there's going to be less number. Instead of a 7, it's going to be like 3 or 4, and the rates are going to be much lower too. They're also going to eliminate this Obamacare tax on the individuals who have no health insurance. So that will be a big tax benefit for some of the individuals. There may be also some elimination of itemized deductions. Almost all deductions will go away except the mortgage interest and charitable contributions. And even the mortgage interest is limited to the new mortgages up to $500,000. But as we all know, this mortgage interest is only temporary, and it stays only for the first 10 years of your mortgage, because after that you'll be paying only on the principal. So, and also the mortgage rate is so low nowadays, so it is not really a major benefit. Some of the people haven't been using that particular itemized deductions. There's also going to be some eliminations of interest payments on student loans and some of the moving expenses, the loss of your personal properties and energy credit and electric cars. And so those are the things that are also on the proposal. But both plans have doubled the standard deductions. The deduction have been increased substantially. So a lot of the way the statistics show that almost 94% will not use the itemized deduction, and they'll go straight to the standard deduction, which will really simplify the tax code. So there is also some of the deductions in the itemized deduction. They're going to be taking away the state and local taxes, what they call as a SALT. But this is going to affect only the residents in California and New York, where the tax rates are really, really high. They also may limit the property tax deductions up to $10,000, and the other major important one is also they may eliminate the personal exemption. Right now, individuals can take $4,050 for every dependent that they claim on their tax returns. So this may not benefit some of the families when they have many children, and they may have to limit their personal exemption. So it is not going to benefit a lot of people, a lot of individuals. There's also going to be, as we discussed before, the alternate minimum taxes may go away, or maybe they may increase the exemption so that some of these individuals may not have to meet that rules of alternate minimum taxes. The debt tax may also disappear, but maybe they may double the exemption from 5.4 million to 10.8 million or something like that. In that case, there may not be that many people who may have to pay the estate taxes. There's also, they have many proposals on the tax credits, which is the child care credit is also always a popular one. But a lot of high income level people were not able to take that credit because of the income level. But now they have expanded a little bit more, and so it will allow some of the parents to take the child care credit. And they also have this new credit for the non-dependent care. When you take care of elderly parents or parents, you may be allowed to take that $500 tax credit. So now we come to the corporation. So again, this is all a proposal, and it's still not clear. It is still on debate. So a lot of these things, we are just kind of like assuming it at this. It's an assumption at this point. So the way it looks like, they're definitely going to reduce the corporate tax returns to 20%. It may not take effect for next 2 years, but it will reduce the rate from 35 to 20%. The thing is, it will help a lot of people.
We have another question from Jonah Heckley Davis. Does the age change for the child credit? Currently, they cut it off at 17. So is it going to go down?
It's still not clear what is going to happen to the child care credit, because that is one of the things that they're still in the proposal. But in next 2 weeks, it'll all be clear, and then you can give us a call. As I mentioned before, every case is different. Every individual, it is unique. And so if you give us a call, we will help you, assist you with that personally, how it applies to you. Thanks for the question. So now we're talking about the corporate, and one of the main drawback in this one is a lot of corporations invest in the foreign countries only because, as I mentioned, the climate is much more friendlier and tax friendly, and then the tax rate is much lower. And because the tax rate is so higher here, they're all shifting their income into foreign countries. So bringing down the tax rate to 20% is going to benefit our corporations to stay in the country then instead of investing in the foreign countries. There's also going to be changes in the international corporate taxes because like the dividends that they receive from the foreign corporation, or if you own more than 10% of the foreign corporation as a subsidiary or something like that, that the dividends is going to be exempt from the U.S. taxation. So that is going to be a major benefit also. So people, the individuals who have foreign corporation will bring in the money to USA without any kind of U.S. taxation, which is going to be benefiting a lot for our U.S. economy. And then a little bit about the business taxes is like the pass-through, the income from the pass-through entities. Currently, all these are taxed at the individual income tax rate. But the new proposal is to set a maximum rate of 25%. So people with the higher tax rates of like a 39.6% are going to be greatly benefited by that. So this is another proposal which is also going to help small businesses, partnership, and LLCs in this way. So all these proposals are good, and like it's going to have a major economic growth, and it will simplify the tax codes. But at this point, it all has to be translated into the law, and when it happens, it is a major shift in our tax system, and it is a huge impact in our economic growth. It is going to simplify the tax code, and many individuals are going to be benefited by this. But still, there are a lot of other factors on how to allocate the income and how to allocate the deductions properly, where to which bucket to use for the income, which bucket to use for the deductions, and it is going to be still it's still going to be complex. Whatever the law is going to be happening, it has to be applied in a very honest and accurate way as per the IRS. So it is not a simple process. It adds more complexity, and then it is taken, some of the deductions are taken away, some of the things are added back, and there's a lot of things that we need to straighten out these wrinkles. So if you guys have any questions, if you'd like to ask me about it, as I mentioned before, this is we are still not clear on how these things are going to affect us in each and individual cases. But if you call us within 2 or 3 weeks, when these law becomes a permanent, we have more things to look into, and then analyze it, and then make sure that that individuals are benefited, and they are. We can help you in that way and assist you to prepare the tax return in a much fairer way. And thank you for listening to us, and I appreciate it. And I'll be still here to take your questions. So if you have any, just call me.
We're going to give it about 3 to 5 minutes if anybody feels like they feel like they have a question they wish to ask.
Mm-hmm. The system, this new political environment really definitely wants to make a change in the tax reform, because it's more complicated. There's a lot of loopholes, and the IRS also feels, and many tax preparers feel, that there has to be a change on this. And there's a lot of the new reform encourages people to invest back in the United States instead of foreign countries. As far as a corporation is concerned, individuals can be benefited by the lower taxes, and all these things are going to be a major impact in our economic growth. But it's still, as I mentioned before, it is still there's a little bit of complexity is in preparing the taxes, and this is where we, as an expert, we can help you and assist you in preparing your tax returns properly, and then help you in personal level. So I think I'm going to close this right now, and then if you have any questions at all, please free to call us. Please free to call us, and then we'll help you. And then this is Mythili Richards again, and thank you for listening. Looking forward to hearing from you and seeing you. Thank you. Bye.